Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading Hope everybody had a great weekend, long weekend. We are back in the saddle. I missed on Friday. Obviously, I was on a little bit of a hiatus. So we're back. Let's get right into it. So I'm going to have a couple classes coming up. Look out for that if you want to sign for the newsletter. And either that or spend a couple of days with me, hit the link below. You can contact me at support@transparenttrading.com if you want any further information on that. Let's get right into it, everybody. Yep, everybody knows the debt ceiling was resolved this weekend. And we did get a little bit of a gap on Sunday in the S&P, but that quickly faded. And we are essentially below now the last week's low, leaving us essentially back. This is, by the way, this is the 30th of May, Tuesday. Thought I mentioned that. So we are essentially on the S&P, not little changed. I mean, we are essentially still in a trading range. We took out 4,200, the 4221 level, 4218 level, which actually, which is a level I've been, I think I did talk about that here. And we did take that out, then came right back down again. So essentially we are right back to where we were prior to all of this happening. And so we essentially are in a range and nothing really changing. Still, as everybody knows, it's the NASDAQ, it's AI, it's the semis, it's, NVIDIA, or however you say it, NVDA ticker symbol. That's been driving the whole thing. We did actually get a pullback today in those stocks. Personally, our group at TTS has been trading actually well. Obviously, no guarantees or doesn't mean it's going to continue to work, but we've been trading Tesla in lieu of the S&P futures because of the lack of really volatility and the lack of levels really on. So I've kind of looked at Tesla with a 1.5 beta, been doing some, been actually last week, we actually had a really nice week in that stock, long and short, by the way. We did both. As you know, that thing swings about $8, $9 a day. So there's some really good opportunities in there. So I've been using that more or less as a proxy for trading the S&P. And again, seems to be working. In fact, we just put on another position just about an hour ago, going into the close today, expecting some more movement after we get out of today was just a consolidation day. Everything kind of pulled back a little bit. Question obviously is this just a pause and then we continue going higher, or do we pull back? And that's all going to be predicated on if, there's a non-farm payrolls, there's some more economic data. There is one slight, could be one snag in the whole thing if the House runs into some issues passing the debt ceiling deal. That could, in fact, send markets down pretty sharply, probably by Friday. But other than that, we're going to be basically now going back to looking at the data, looking at the Fed, sticky inflation, all that stuff. So generally speaking, from a technical perspective, again, fairly challenged, the market. We actually have a level above that we're looking at, 4250. You can see that on the charts. Then another level around 4,300 on the S&P. Didn't even get there today. And again, today was just kind of a consolidation, sloshing around kind of day. Now going to the NASDAQ. The NASDAQ also came into a level 14,485, 14,657. You can see that on your charts if you're looking at your 4-hour, 8-hour charts. Again, we've had these kind of shallow pullbacks, and then the market takes off again. we are again in the midst of a consolidation. Whether again we continue to go higher or we pull back is going to be interesting. We do have some pullback there around the 14,000 area in the Nasdaq. Um, so we'll see if that what happens there, what transpires there. But generally, it's pretty much 8 or 10 stocks that are driving this whole thing. Even today, if you looked at your heat maps, all red, other than just even actually the semi stocks were red today. So it was just an interesting and still very very kind of bifurcated market. It's just AI and everything else. Pretty much all the rest of the stocks. Energy was down today. Banks were kind of all over the place today. So it's just, generally speaking, more down than up. But that is the market we're in. And again, we have to find other areas such as non-correlated markets. I wrote about it this weekend. Grains are moving pretty nicely. Some of the currencies are moving. Yen is moving, peso's moving. So, as you know, you got to focus on what is actually creating some movement, some volatility. So you can make some money, and not just fixate on one or two markets, that type of thing. And it's interesting because even as the market just kind of, even the SPY, the SPY or the S&P kind of move in 20, 30 point ranges, Tesla, with that high beta, even last week was we caught that rally on Tesla with the S&P, jumping about 20, 30 points, whatever it was. Tesla actually rallied almost 10 points from top to bottom, and we were fortunate enough to catch that. So that's kind of using that. If you're interested in learning something like that, I'm going to have some classes coming up, or ping me at support at Transparent Trading Solutions to see what we're doing in that front. Okay. All right. And then, nothing really to speak of in terms of the Dow. It's kind of just a laggard. So is the Russell, just meandering about back and forth, nothing going on there. Bonds did have a nice rally. As I mentioned, I've been talking about the TLT, trying to get long that. It hit right 100, right on the button. Still, we're trying to get long a little bit lower than that. So we did not get filled on that. But you can see, as I mentioned, I think it was Tuesday, all of these trades have been reversed. We had the bonds being sold off because of concerns over the debt ceiling. Now that that's resolved, you saw kind of a relief rally in the bonds. We'll see if that sticks or we continue to go lower on the bond market. But we've had look at the 30-year, the 5-year, the 10-year, all had some really nice bounces. Again, those levels on the futures are very, very wide. You have to take on a lot of risk, $300, $400, $500, $600, even the smallest level. So that kind of takes that out of the equation for us, at least, because obviously nobody wants to get stopped out with a $500 or $600 loss, especially when you're trading with a smaller account and that type of thing. So we have to obviously accommodate the people with smaller accounts, as well as and obviously personal agency. I do go through some levels, and I leave it up to people if they want to take that kind of risk, which I find very few people actually like to do. So it is what it is, and we'll see. We have some levels on the 30-year shorting levels where we broke down from around 129. So that could be a shorting situation in the bond market on the 10-year, and similarly on the 30-year and the 10-year, right up against the 114.5, which is where we broke down from. Could be some selling opportunities there. The dollar did pull back also. So again, a lot of these trades that were working last week in front of the debt ceiling situation have pulled back a little bit. Now the dollar did not pull back a lot, almost consolidating as well, which is going to be interesting to see if it breaks down. It's got to break 10, let's call it 103.86 on the dollar index. Just more focused on the individual currencies, in particular the yen. As I mentioned, we're trying to get long the yen. I thought we were going to get filled on that over the weekend. We did not fill, did rally a little bit. Also looking at some of the com dolls, Aussie, New Zealand, Canada, and Mexican peso. Those are the currencies I've been looking at. Mexican peso had a really nice strong rally into that 56.75 level and then pulled back, looking for a higher level to get short. But now it looks like the Mexican peso starting to move as well. So those are the markets I'm focused on primarily. In terms of the silver and gold, not a lot. Range trading looks like gold may want to break out above 12. Let's see, 1985-ish, 1984. You can look at that. We've kind of been sideways also, but maybe gold's starting to perk up a little bit. But again, it's a dollar play. Nothing really happening there. So we just kind of leave that alone. Similar with copper. All the metals really just meandering really, really tight. Oil did get hit pretty hard today. In fact, it came close to getting us short at 75. Never got up there. Now we're actually trying to get long, and looks like we turned a little bit above our level. So we'll see that possibly hit us tonight around the 68 level, something right in there. You can see that on your charts. So we come round trip, back and forth, still largely range trading. It's going to be interesting if it can hold 68 on oil. If not, it's probably going into the low 60s, I would imagine, eventually, if it can't hold on to this. So maybe that's due for a break, or maybe we just kind of rally from here. I mean, remember last time we were down hard, we had that ricochet off the 63.74, kind of big expanded, ricochet candle, whatever you call it, big pivot low. Maybe we test that at some point. Wouldn't shock me in the least if we test those lows again at some point. So that nat gas, really not a whole lot going on there. Almost like forming a little bit of a range here between 250 and 225. Again, pretty lackluster trading in there. We finally did exit our Boyle position on Friday with a small loss, and now we're going to be focused more primarily on the future side of nat gas because it's quieted down quite a bit. So there's some situation there for us as well. Grains, again, this is something that we definitely want to focus on. If you're in the futures market, you got to look at the grains. We had a big sell-off today. Soybeans in particular, we're trading in a range between, let's say, $13.45 and about $13 a bushel. Looks like we broke down today. We may have an opportunity coming up down at the 12.70 area in soybeans. I was looking for a short up top again, 13.58. Never got there. Now it looks like but clearly, we got resistance at 13.45 on soybeans. We'll see if that actually pans out. Wheat also broke 6. Looks like that's headed down lower to about 5.50 a bushel. And corn is the one that's kind of holding up a little bit better. We are trying to get long, and there's a big gap to fill at 6.45. So we'll have to see if that pans out. But generally speaking, we are just a lot of markets. Just kind of you really have to focus on a few markets that are moving and just spend your energy there. Options are great right now because obviously with more of an individual stock play with a lot of these, AMD, gosh, that thing went from like 80 to 130, on and on and on. So, this is one aspect of the trading realm that I obviously am a big proponent of, is to have these various asset classes so that you're not just kind of locked into one, because if the markets are challenged like they are right now on the future side, there's still options provide a great alternative. especially, when you're looking at some of these stocks that are moving. And it was an incredible move, as you know, on um, NVDA. I mean those some of those options were just incredible. The call options, if you were looking at those pre earnings, and some will say, well, how did you know what earnings you're going to? Well, that's the beauty of what we do. It's market neutral. We don't have to guess a direction. That's the whole beauty of this thing, right? You don't have to guess a direction. That's what we've been doing with Tesla. Uh, if you have some market neutral strategies, uh, then it's all just about volatility. It's not about the direction, which is something that a lot of people don't really kind of understand. So um, as long as the volatility is there, you're going to make money. If it's not there, then you lose money on those particular strategies. So if you want some information, I'm probably going to have a class on that coming up. So stay tuned for that. Other than that, everybody, look, again, I'm going to cut it short because there's really not a lot. Other than what I just talked about, to get into, obviously, if you want to learn some more specifics, you can join me for 5 free days and so forth, or join me for a class, which I'm probably going to schedule one pretty soon here. Other than that, again, we have, non-farm payrolls on Friday. We'll see if this. A lot of people are. I wrote about it over the weekend uh, in terms of, is the AI, all these semi stocks, like the just tremendous moves in some of these stocks. Is it almost like 1999? I was around in 1999 when the tech bubble was inflating. Are we getting there? I don't think we're there yet, but if it keeps going the way it is right now, then you got to be very, very careful. Obviously, you still don't want to chase if you're going to look to engage in, in the Nasdaq futures or QQQs or anything related to Nasdaq, which is still clearly the outperformer. Even on days like today, you can still see the clear outperformance, and it's all driven very narrow. At some point, is it going to is there going to be a day of reckoning, if you will? Well, we'll see. But again, just rely on the charts and strategy, and you'll be fine. Okay. All right, everybody. Have a great rest of your week. I will be on Friday. I will be here on Friday. Again, if you need anything or have some questions, hit the website. There's some links below, and I will talk to you on Friday. Have a great rest of the week, everybody. Talk to you then.